Hello traders. Yes, welcome to Awesome Forex, and here is our homepage as usual. Now remember, we have links, we have special buttons there. So you can hit a button for LITEFOREX broker, then we have button for TICKMILL broker, and then we have buttons for social media. So you can visit any specific button that you want to connect with us. And this is very important thing that you're supposed to do before going anywhere. Make sure that you hit those specific buttons there, and this is easy for those who are using computers. They can have access to this appearance like how it is seen here, but for those who are using phones, make sure that you visit those links on the video descriptions. You can find them on the video descriptions. It is very important because we don't share all information on YouTube. So some information they are available on Facebook, some information on Instagram, and some information on our Telegram group. So make sure that you do that. So welcome to Awesome Forex, and here is our weekend to weekend analysis. And basically we're going to start with analysis on gold. As usual, we have analysis on gold, which is most popular, which is most wanted. Most people, they like to hear what is expected to happen in the coming week on gold. So I'm going to share a detailed analysis. Today it is a detailed analysis on gold. I'm going to give a detailed and in-depth analysis. We are going to see the depth of the market. We are going to see the depth of the market in detail. So now, always I'm going to show you what we were expecting for this week, because we had analysis, a past analysis on the weekend, and therefore we had projections for this week. So now I'm going to explain what we expected and what has happened, and then finally I will show what do we expect in the coming week. So now shortly, now starting with what we expected in the past week. And what has happened. Mainly last weekend we were around this area. Now it was 29th. It was 29th of October. We were around this area. So now on 29th of October, if you have not watched maybe our previous analysis, so make sure that you may watch it to see correlation with what I'm saying here, or sometimes you may compare by yourself what I said in a video with what has happened in a market. So now we were around this area where we were expecting a very short correction to the downside. Now that correction was followed by an upward move, and that upward move we were projecting a retest to this channel. We had this trend line here, so we were expecting a retest to this trend line. So now market did the same. It retested that trend line. Now through it was now mainly the whole first day of the week. Now it is almost the whole first day of the week. Market was up, retesting that broken trend line, because it was broken with this very strong bearish candle. So now after retest, the next 2 days of the week, market was down, and actually we had this projection, a downward movement, and we were expecting market to have this downward movement in completion of the fifth wave of wave A. It was in completion of the fifth wave of wave A. Now after this, what were we expecting? We were expecting an upward move, but now this upward move has deviation from what we were expecting. So I'm going to explain now what has happened in relation to what we were expecting to happen, or in what market structure we expected. So now the whole movement to the upside and then to the downside, and followed by an upward movement, has done the same. But now there are minor deviations. Those deviations will lead us into changing our wave counts. Now we are going to our second preferred wave count, because here we were in the first preferred wave count that met most of the Elliott wave rules and guidelines. Our first wave count, we had now wave 1 to the downside, wave 2 to the upside. So this was like a diagonal. Now this diagonal, that was leading diagonal in wave A, we were expecting it to be followed by wave B to the upside. After having wave B to the upside, now our last projection was having wave C to the downside. That was our last projection. Our last projection was having wave C to the downside, but now the market formation has changed, so we are going to tweak our counts. Then we move to our second preferred wave count that we expect is going to guide us in the coming week. Our second wave count is going to guide us in the coming week. But now what has happened is really within our projection. What has happened, it is still in our projection. So now what are we going to change here? First of all, we are not expecting to have this deep movement to the downside. We don't expect to have this deep movement to the downside to complete this wave C of wave 2 to the downside. So now we're going to remove this ABC, and then this movement to the downside is now going to be the second wave. Now this is going to be the second wave. Now it has yet completed. So before, this was just a beginning of the second wave. We were expecting an upside to correct this one, followed by the second move to the downside, which will be completion. The second move to the downside, we were expecting this to be completion of wave 2, completion of the second wave. So now we don't expect to have that further movement to the downside. But now what do we expect now? We expect the market will correct shortly, then keep on moving to the upside. So I'll show it in detail later. I'm going to show it in detail later, and then I will explain in other time frames. Now what I'm showing you now is what the market has done, and always what are we going to change from those counts that we had. Then later I'm going to dig in detail to see the market structure in other time frames. But now we are in 4 hours, which is just a detailed time frame to show those information in detail. So now this 1 2 3 4 to the downside is no longer going to be 1 2 3 4 to the downside. So now this is going to change, and our count is going to change from this upward move. Now looking clearly, or looking in detail on this upward move, you will realize that now this was something like, this was 1 2, then the third wave was extended. Now the third wave was extended. So if the third wave was extended, now it had 1 2 3 4, then 5 to the upside. Now there was 5 to the upside now in the completion of this third wave. So now after completion of this third wave, having wave 5 truncated, the second move now was correction to the downside, and this was the fourth wave. So now after the fourth wave to the downside, this was the fifth of the whole move. This was the fifth of the whole move. So now this fifth wave is no longer going to be here. So we move it to this area, and wave 1 now is going to be here. Then maybe I can remove this line. So now we will have an internal count. Now we will have an internal count, whereby our internal count will be 1, will be 2, and then 1 2 3 4. This will be 3, then finally 4 5 to the upside. Now in the completion of the third wave, and finally fourth to the downside, and this will be fifth in the completion of the first wave in the higher degree. So it is something like that. It is something like that, something like that. So after having that, maybe we can remove this. So after having that 1 2 3 4 5 to the upside in the completion of the third wave, then the fourth to the downside, the fifth to the upside. Now what happened here? What happened here to the downside? This will be, now what happened to the downside? This will be A, then B to the upside, C to the downside. Now we have an ABC move in correction. Now this was ABC move, which was correction. Now why did we expected that this correction must be deep? Because based on the idea that the depth of correction, now based on the idea that the depth of correction, now in most cases we expect market to move to around the area where the second wave was ended. So we're expecting this to keep on moving to the downside in order to reach the level where the second wave was moved. So now, what happened here? What happened here to the downside? This will be A, then B to the upside, C to the downside. Now what happened to the downside? This will be A, then B to the upside, C to the downside. Now in the completion of the third wave, this will be fifth in the completion of the first wave in the higher degree. So now we have changed our count, and now the second wave has moved to this area and it has completed because the fifth wave was extended. Now this is because the fifth wave was extended. So now if the fifth wave was extended, so based on the concept of features or characteristics of the corrective structures following the extension in the fifth wave, usually we expect a correction to end to the area where the fourth wave was moved to. So now the fourth wave ended around this area, therefore we expect now, actually it is common now for the fourth wave to move to around the same area. So from now, based on the idea of extension of the fifth wave, from now the second wave is complete to the downside, so we no longer expect this deep downward movement in the completion of the second wave. So now this is an overview. So now we have the 5 wave up to that area, the ABC to the downside. Now in the completion of this ABC, what is happening now, it is just the movement in the third wave. What is happening now here is the movement in the third wave. So the third wave will start with its first wave, then we'll have its second wave, third wave, fourth and fifth to the upside. So if we'll maybe zoom this one, you can find that we have the third wave to this top. So we expect now the third wave, it is what is happening now. It is what is happening now. So it has started with its first wave, so we'll expect the correction, then it will keep on moving with its third, then the fourth, the fifth to the upside in completion of the third wave. So let us see a detailed analysis now. Let us see a detailed analysis. We can start with the weekly time frame. Now in a weekly time frame, we have those wave counts. Maybe there are a lot of things here, and some people they think maybe those things they occur automatically, but there's no automation here. Everything is manual. So you must know the concept of wave degrees. You must be aware of the concept of wave degrees. You have to make your counts on various degrees. This is based on the fractal nature of the Elliott wave. So each wave has got its internal structure. That's why you can have the 1, 2, 3, 4, 5 in the completion of the third wave, then you have 5 in the completion of the third wave, then you have 5 in the completion of the fifth wave to the top. This is what we call a fractal nature. So be aware, or you must be aware of the idea of wave degrees. So now, looking to this structure in detail, looking to the market structure in detail in a weekly time frame, you can find that we have those counts, we have those wave counts, and also we have channels. Mainly I try to include the idea of wave counts for those who use Elliott wave, and also I use the idea of price action. Mainly I use also the idea of price action. So I incorporate those two things. For those who don't know wave counts, actually they may concentrate on the price action things like trend lines, support and resistance. But for those who know the concept of the wave count, they may incorporate in their analysis the idea of wave counts. So now based on price action now, we're looking on the price action idea. We have this very strong trend line here. We have a very strong trend line here, and this is in a weekly time frame. So market is moving toward that trend line. Market is moving toward that trend line. And also we had this trend line, this one was since last week. I explained about this also last week. I said market was here in this bearish candle last weekend, or always market closed with this bearish candle. So it was actually in between now. It was like in between this trend line. So it was not full to the upside, and it was not also full to the downside. That's why our analysis last week was like 50-50, but it wasn't like that. For those who know wave counts, I'm sure they were aware with what we were talking about in those downward movements and upward movements. But some people, they thought that we are like 50-50 on the direction of the market, but we had a full direction based on wave counts. So it was in between. Now after having that in between movement last week, Now this week we find that the market has strongly broken to the upside. It has strongly broken and it has closed the while it has still a very strong move to the upside. So if it has strongly broken this, what we expect, market may be rejected to around this trend line. It may be rejected to around this trend line. This one, we have this trend line here in the at the top. So now if we have that trend line, now this is based on the technical analysis idea. This is based on technical analysis idea. So we can add also a resistance around this area that is somehow strong from the past. We have resistance there that was somehow strong from the past. Market was rejected. Now price was rejected several times along this trend line. So now what we also expect, this trend line, I mean this resistance, now this resistance will be like a magnet whereby it will pull this price to that area, then this will be followed by a movement to the downside. That's what we expect. Now market will hit this level. After hitting this level, so what we expect is market will be rejected to the downside, and this rejection will not be that deep. Always it will not be that deep, maybe moving strongly down. It will spine to certain areas. We'll find in lower time frames where the market is expected to move to the downside. But now what we have to watch now, what we have to watch is a downward movement must be followed by a short move to the upside. We must have a very short move to the upside, then this will be followed by a downward move. So don't expect a downward move immediately on the opening of the market, maybe on Monday. We don't have an immediate downward move. A downward move is going to be seen after a short movement to the upside. So now we're in a daily time frame. In a daily time frame, we can see other things now. I'm still here in technical. I'm still in price action now. I'm still in price action. So as we move to lower time frames, I will incorporate the wave count. So now in technical analysis, we still have that trend line, and also we have that resistance that market always hitted it several times. So now what we see here is the market also, it must hit that area, and that area has got two confluence. It has got a resistance and also it has got a trend line. It has got this trend line. So there are two confluence for this market to move to the upside. So we'll incorporate wave counts. If wave counts also suggest a continuation to the upside, now this will be a very strong direction. So now in daily time frame, we can have this an engulfing thing there. This bullish candle was at least engulfed this bearish candle. So also this was a confirmation for buying around this area. Was also a confirmation for buying around this area. That is in a daily time frame. So we don't have many things maybe to share here in a daily time frame. There are not many things to share there in a daily time frame. So now I can keep on moving to lower time frames, maybe in 4 hours. Now a 4 hours time frame, it gives us detailed informations. It's where we can incorporate the wave counts, because I don't like to confuse people here having those wave counts in all time frames, because there are few people now. There are few people who use wave counts. Most of people, they understand that price action, the issues on trend lines, the issues on support and resistance, the issues on what's called the candlestick patterns and chart patterns. So I incorporate the wave count here, whereby I already said we have changed our counts. We had the ABC to the downside that was completed. So if we had a complete ABC to the downside in the completion of the second wave, so this movement to the upside is an impasse, whereby this will be one, then we have the second wave, the third wave, then we had this ABC. Now I label this ABC when the market was around this area, to have an idea that market will keep on moving to the upside. So Now this was the fourth wave, and finally market is running in the fifth, whereby we expect the fifth to be around this area. Now you see the fifth will be extended, the fifth wave will be extended, and it must move to about this trend line, and also we have this resistance level, so it may move to around this area where there is trend line, and also there is a resistance. And it is a characteristic of commodities mainly. Mostly in fifth wave, extension occurs in commodities. Now extension of the fifth wave, it is most common in commodities. So gold also may exhibit that thing. It may exhibit that thing, so it may keep on moving in any way. It may take a form of diagonal or anything else. It may keep on moving in any way until it hits that trend line. So after reaching that area is where we expect a movement to the downside. It's where we'll expect a movement to the downside. And also we have got another powerful thing here. Also we have another very powerful thing, whereby when the market was moving toward this minor resistance, when it was moving toward this minor resistance, we were expecting rejection at this area. But the market moved strongly, broken and closed out of this resistance. So it closed out of this resistance. Now closing out of this resistance was also a powerful thing that market will keep on moving to the upside. That is also a powerful thing that markets will keep on moving to the upside. So how far is going to move to the upside? We must watch it to spine to around this area. We must watch it to move up to this resistance area, and also we have a trend line at the same place. So now this is like an overview, incorporating with other things like volume or strength of the market. Sometimes you can call it as strength of the market by using relative strength index. Also sometimes you may incorporate things like the overbought and oversold conditions. You can find that market still have a power to move to the upside. It has not yet overbought. It has still have some power. So this also adds some confirmation that may keep on moving until it becomes overbought, until it overbuy, and then it will get corrected. Now it will get corrected, but mainly RSI is mostly used to support the wave counts. It is mostly used to support the wave counts. If you will assess this, you will find that it has got the first wave, the second, the third wave, the fourth, which was sideways. Now it is in the fifth. So this fifth wave, if it will move to an overbought condition, it will be an extended fifth. It will be an extended fifth wave. So what we have to watch is extension in the fifth. What we have to watch is extension in the fifth. After extension, forget about this one. After extension, the market may correct beyond this. The market may correct beyond this. Now you have to forget about this. This one has already done its function, whereby we proved this breakout and retest, then it kept on moving to the upside. So forget about correction maybe to end to around this area, because it will be correction of the second wave that is usually deep. So this may go little bit deeper. Now it may go deeper to retest this. Maybe sometimes it may move up to this trend line. It is also possible. So when are we going to identify this correction? Always this correction will be identified after the market has completed this upward move. When the market has already completed this upward move, it is when we will be able to anticipate where correction is going to end. So roughly now we expect it may move up to this area, and it is very rare for this for price to hit this to spine to this resistance that has turned into support. It is very rare. It is very rare. If market will turn around this area and keep on buying, this will be due to the strength of the third wave, because we are in a third wave of the third wave. So now this is very strong. Now if the market or the price now is very strong to a certain direction, always correction, they become very short, like this one. It was very short. This was the second wave, but it corrected very shallow. Now it moved on. The fourth wave also was also shallow. So if we'll have the same thing here, what we have to watch is the action of the market around this support. Now it was resistance, now it is support. So we have to watch the action of the market around this support. So that's a very basic thing to watch for the coming week. So thank you for your time, and make sure that you like, make sure that you comment, make sure that you subscribe. So do anything. Also make sure that you share this video in order other traders to have access to this very valuable information from Awesome Forex. So thank you and welcome again to Awesome Forex.